we've been pretty much forecasting a 4,000 level into 2026 and a 5,000 level into 2027. Not because those are nice round numbers, which they are, but just looking at, again, all of this momentum, the purchasing that's going to happen, the demand that's going to come into the gold space. And again, once banks are holding more gold or central banks are holding more gold, it really does create a cushion for even where market volatility, which always comes up in any asset, might push gold down. And that's kind of what we've been seeing. That was the point of that 10-year piece, is that, you don't see gold really reacting that much to volatility. I mean, you see some percentage movements down here and there, but for the most part, it stayed pretty constant.
Monaco 64, home of alternative economics and contrarian views. Today, I have the pleasure of speaking with Nomi Prins. Nomi Prins is a PhD economist, geopolitical financial expert, best-selling author, and serves as an unwavering advocate for financial reform and foundational economic growth. You can find her analysis at prinsite.substack.com. Nomi, welcome back.
Thanks so much. Great to be back.
Yeah, and we spoke last time about Brazil because you were in Rio, and I was surprised when you told me that they're very advanced in terms of digital currency and cryptocurrencies. And what I wanted to talk about today is not just about the BRICS, but also about U.S. states they've been adopting legal tender laws for gold and silver. But my question is, it seems to me, and maybe you can answer that the Fed is under attack, not just internationally, but domestically. And maybe we could start with the BRICS summit that's coming up in Rio, July 6th and 7th. And I've heard speculation of something called the Rio Reset. Is that something you're aware of? And are you going to be there at the summit?
Well, thank you for that question. I'm unfortunately not, because I'm keynoting a major conference in the United States at the same time for natural resources, the World Conference in Florida. So I won't be able to attend the BRICS Summit this time. But it is an exciting time. And you're right, it is pivotal in that there's been this continuation since actually we did last speak, since the G20 did gather in Rio, and there's been a lot of course, developments since then. We've had an incoming Trump administration. We've had more conversations about tariffs and trade wars and gold and rates and debt, and diversification from a systems perspective and a currency perspective, from the US dollar, more so as a result of all of this uncertainty, and also of more coordination really between Brazil and China in particular. I mean, they are major trade partners with each other, but in terms of developing more entrenched agreements along those lines. So I won't be there, but there's definitely a lot of interesting forward movements from sort of the back conversations of what happened in the wake of the G20 and moving forward.
And do you think gold will be an important part of this new BRICS monetary architecture, whatever you want to call it?
I do, and one of the things that we've seen in gold, and it's a teeny bit back off of its highs, but it has registered, and I continue to write a lot about this. Not just sort of standard old gold things, as in wealth accumulation and inflation fighting and all that in terms of an asset, but it's really become entrenched in conversations about some new form of a gold standard now, not necessarily the form that we had in before 1971 when we had so the dollar attached to gold and you could redeem in gold and all of that. It's not so much that that's going to happen, particularly if there's a global element of a gold standard. There's just not simply enough gold to convert into everyone else's fiat currency as we move forward. But there is certainly a focus on using gold as an independent physical asset, which it is, and in terms of stockpiling it more and more so with respect to central banks that are keen to continue to diversify away from the US dollar. That includes, of course, China, India, the UAE, Saudi Arabia, and so forth. Countries that have been accumulating gold, continue to accumulate gold as that diversifier against the US dollar, and also continuing to develop systems, payment systems. And we talked a little bit about this last time, to utilize potentially with that metric of an evaluation of gold in the backdrop. So even though this isn't an official gold standard moment, it is certainly what we're watching is a developing story where gold is taking on more and more of a geopolitical and geoeconomic than it has ever before. And I think this is going to continue. And the BRICS summit, which has expanded, has expanded recently to include all of these extra countries, including, whether it's Iran, Egypt, the UAE, Saudi Arabia, and so forth, which are oil producing countries and which have developed portfolios again into real assets as well outside of oil. This is something to watch.
Yeah, and with the Trump administration and this tariff war, I mean, we're speaking today, it's Friday, the 30th of May, and I've seen that Trump has posted on Truth Social that he's not happy. He says China has broken the agreement that they had in Geneva, and I just saw that they've imposed more like tariffs, I think, on tech, Chinese tech companies. Do you think that's pushing the BRICS countries even more to try and find an alternative to the dollar?
Oh, absolutely. It's the trade wars and the tariff battles between the U.S. and China in particular, but with respect to U.S. policy and the uncertainty surrounding a lot of trade policy currently that has come from this Trump administration, because yeah, from day to day it changes, and regardless of where it winds up in the limit, this constant uncertainty over where trade is going to wind up and what tariffs are going to be and what parts of the supply chain, whether it's from raw materials on up to produced, processed, manufactured pieces of things, whether it's hardware, whether it's airplanes, whether it's cars, whatever it might be, is certainly pushing countries to develop their own autonomy from the uncertainty, if nothing else, net of the cost of tariffs or of moving supply chains or reconsidering allied trading partners and trading more with partners outside the U.S. and with the U.S. and all of these things that are happening on a sort of minor basis, just in reaction to the tariffs themselves. That uncertainty is definitely something that is pushing these countries to rethink their global strategies. And part of one of the bases, back to a little bit about gold, but also in general currency agreements amongst themselves, these are things that are required by countries to have more autonomy over their own economies. And so when you have uncertainty thrown into economic development and growth and anything else that might push into that growth, it it becomes necessary from the standpoint of other countries to positioning currency patterns. That's not to say that it's going to we're going to be in a world where there's no trade with the United States because of these tariffs or because of the uncertainty. So both import and export, and so that's going to continue. But that stress that the uncertainty is playing on the world, which ultimately consumers feel, as do companies in the middle, is certainly reacting to the U.S. with their own decisions.
So moving to the US now domestically, and I think it was only 2 days ago, Ron DeSantis, the governor of Florida, declared that gold and silver now are legal tender. And he was speaking behind a podium that said financial sovereignty. And I've got an anecdotal story about DeSantis because I went to Florida in January this year to visit with Andy Schectman, and he took me to play golf at Trump's course in West Palm Beach, and we
Mhm.
waited at the gate for like half an hour because Trump was actually playing, and it was January 15th. And Andy's friend who took us there said, "Well, he's playing with Ron DeSantis." So it's strange that this speculation of a real reset is coming from Birch Gold Company, which is sponsored by, well, not sponsored, but I think Donald Trump Jr. is affiliated with them. And then you have
Mhm.
Ron DeSantis, a red state, declaring gold. They passed a law, gold and silver legal tender. And you have Texas as well. They need approval from the governor. They're planning to make gold and silver legal tender and also issue gold and silver digital currency. To me, it seems like yes, it's confusing. Is Trump for the states becoming more sovereign from the Fed? I mean, he met Powell yesterday. He said rates are still not low enough. Well, I mean, it's all a bit confusing to me. Maybe you've got some insight on what's going on domestically.
Well, I think, yeah, the states you mentioned, there's other states, there's Wyoming, Utah, Oklahoma, Louisiana, South Carolina. I mean, there are definitely states that are in some or all in aspects of accepting gold and silver as legal U.S. tender, meaning it can be used to basically pay for the state uh, tax bills. That's ultimately what it means. It already can be used, to basically turn in for dollars, in terms of exchanges outside of the state. But what this does is it moves gold and silver really back to a level of being able be used for state cost driven purposes in commerce and all of that officially. And I think connecting that gold to a digital currency expands upon that, because at the end of the day, a lot of our activities are in digital or moving towards digital currencies, and to have a digital representation of gold is also accepted, is also part of the technology of where we're going to with respect to currencies and digital. So yes, that's all part of the same path. And of course, the Trump administration has been supportive of Bitcoin. They've talked about having a digital currency reserve in terms of stockpiling different forms of digital currency. The Fed has had papers on digital currency. They're a bit behind some of the other central banks in terms of realizing digital currency. For example, China is already has a system where they have they're prototyping their digital currency. Brazil is close to doing that this year. I mean, there's other countries that are further ahead than the United States, but it is something that the United States is definitely doing, and the combination of digital and gold is happening at this moment, because these are ways to diversify against U.S. debt, which is denominated in fiat currency. So if there's a through line between where these paths are moving towards and where the administration might be thinking or gauging its thinking relative to the future, then it does make sense to look at gold, to look at silver, to look at digital, and to look at all of it together, and to also want the Fed to cut rates, because that's something that President Trump's been talking about really quite some time. Growth has stagnated in the United States. Inflation, just the most recent numbers, is really hovering in the two handles, which is technically where the Fed, they wanted exactly two, but is where the Fed is comfortable with inflation over these years of it having been higher. But really, it's come down quite significantly. And what President Trump, I think, was doing the other day is restating to Powell, and he's done this before. He's done it in social media recently and in his last administration, that he needs to cut rates in order to really stimulate the economy, which at the moment the Trump administration doesn't have a particularly well noted, or if any, plan to actually do strategically. So in that manner, I think President Trump is sort of hoping that if the Fed can cut rates, it will have a stimulation effect on the economy, regardless of whether there's actual policy coming from the United States to government to do that.
So, do you think with the Trump administration, like pushing for digital currencies, maybe even gold, and the states, each in the red states for the most part, adopting gold and silver as legal tender, do you think President Trump is kind of hedging his bets if there's a fiat currency dollar crisis, like debt crisis, then the U.S. would be ready to just reset everything with gold and silver?
Well, I don't think the U.S. is going to reset everything with gold and silver. I mean, if anything, yes, that this could be a hedge where we're not about to go back to a U.S. gold standard, not least because we have nearly $37 trillion of debt outstanding, and that's not going to be repaid in gold. So, I mean, there's a lot going on, and a lot of different pieces to that. But I do think that there is some thought in the administration and the Treasury Department that if there are these other factors or other forms of currency, whether it be gold or whether it be digital, it can sort of diffuse that fiat nature of the dollar, not necessarily protect it, but just kind of diffuse the impact if it does get lower in price, that there is another form of asset in the form physically of gold or digitally in terms of Bitcoin or another form of cryptocurrency, probably Bitcoin, as it's most prevalent, to pay for things or to be used in potentially the Treasury ledger to pay for things. So it's not necessarily to cut down on debt, but it might be to allow for less issuance of debt, but the numbers are still such that the debt's going to increase with this budget once it does get passed. Certainly because of tax reductions that it has incorporated in it, regardless of what the arguments are that kind of finesse those around the edge for growth of the Defense Department and other things is pretty similar. That's going to be a call on debt, and other nations are buying our debt to the extent that they were. So there's a need to have the Fed actually buy more debt, which he didn't specify, Trump, the other day, but reducing rates is one way of hoping that the 10-year and the 30-year will come down in yield.
Yeah, I mean, since well, the Fed cut rates in September last year by 50 basis points, then they cut twice again by 25 each time, and the 10-year yield has gone from 3.6 to 4.4. So we're not sure whether it would have that impact. But talking about that, Nomi, you recently wrote about what gold sees in the 10-year yield, 10-year Treasury yield. Could you go over that for the viewers?
Yeah, thanks for mentioning that. That was one of those pieces that came about with me just sitting around and saying, how come we're not talking about what you just mentioned? You know, that the 10-year has gone up in yield, even though rates have come down. And of course, rates haven't come down recently, but even so, it didn't come down the way expectations would have indicated. In fact, the yield curve steepened, but not because things are better, but because things are worse, and because the 10-year is actually showing signs of worry, signs of stress, signs of debt anxiety, and a lack of as many buyers, uncertainty about the future. And so what gold is seeing on the flip side of that is that it can be sort of the savior for that. If you just looked at them as like, potentially personalities, the 10-year personality, which is all sort of worried and fearful of the future, and gold as sort of the hero personality, where it's saying, look, I got this. And that's really what investors are showing by buying gold. And that's in addition to what we are just talking about in terms of central banks diversifying with gold. Gold also has this role of being that not just historic safe haven because it's physical, which it also is, but also because it's now shown itself to be stable, even though the 10-year and of course the 30-year is just touched above 5%. It's a bit below it as we speak now, but it's shown itself to be more of the stable form of non-debt currency.
Yeah, and what about silver? I wanted to ask you about silver because the gold silver ratio is hovering around 100. And historically, like since the fall of Bretton Woods, precious metals bull markets, towards the culmination of the bull market, silver led the way. And right now, it's not leading the way. How do you see silver? And do you think we need to see silver start outperforming gold to see gold really take off?
It's a great question, and it is something that those of us who watch silver and gold contemplate quite a lot. And my take on silver relative to gold right now, and why that ratio is so high, is that gold has so much momentum behind it, and not just because of purchases, but because of all of these factors that we're discussing right now, because of its hedged to uncertainty, its hedged to inflation, its physicality, its use as a central bank currency, its acceptance as a tier one currency for reserves, its discussions among states and among sovereigns worldwide in terms of it being or needing to be a tender and a part of wealth portfolios, individual investors coming more into the asset and diversifying their portfolios, corporations diversifying their portfolios, money managers from Morgan Stanley to BlackRock suggesting more of an investment to their private wealth clients in gold. I mean, it's all gold all the time, right? So all of these reasons culminate in gold's story being far more prevalent and powerful right now than silver's. And so that representation of past relationships doesn't really take into account what I'll call gold momentum because of all these factors. Now, that being said, because silver can be, India, for example, used to have lots of silver relative to its gold portfolio back in the day and so forth. It's definitely a precious metal that can be used for some of those purposes. But again, without that momentum, it also has secondary uses, which are actually its primary uses of being an industrial metal. And I think this is where it's actually had some problems, because while all this trade uncertainty has been happening, while economic growth has been, to an extent, stagnating, depending on which quarter you're looking at, but certainly adjusted for inflation, silver as basically an expansive type of asset in terms of industrial growth has not had the story attached to it to combat the gold story or to even compete with the gold story. There's a fundamental amount of infrastructure being redeveloped in the United States from a manufacturing standpoint to an energy standpoint in terms of upgrading and its uses as a conductor, as is copper. And it's certainly majorly used in solar and other things throughout the world, as well as a wealth asset. But again, not with that momentum and with that pushback that, well, what is happening to the economy? What are tariffs going to do to growth? And because of that, silver just hasn't had as much of the tailwinds that gold has had. In fact, it's had to contend with those headwinds, and I think that's just what we're seeing in real time. But if we take all of that away and note that actually, so that economic growth might be slow, but infrastructure development is still moving forward, and energy transformation development is still moving forward, then silver should eventually get some of those tailwinds back, and we should see silver prices, start to hit back around the 50 levels or get to the 50 levels once we see the trade stuff abate a bit and continue to have these conversations about its relationship to gold. But that's what's happening. It just hasn't had the force.
Yeah, you mentioned tier one. Gold is a tier one asset, and there's been a lot of debate about Basel III and gold as being used to calculate tier one capital adequacy for the banks. The LBMA came out with an article a few weeks ago saying that it's wrong to say that gold is going to be a tier one asset because it's always been. Have you got any opinion on that? Because it doesn't seem to be very clear. There's a lot of cognitive dissonance. I mean, I consider gold the safest monetary asset. Yeah.
Well, what's happening is there's different distinctions in terms of what Basel III, which is basically sort of the regulation document for banks internationally, um, says with respect to gold. And what it is that in about classified not just as a tier one, but as something called a high quality liquid asset or an HOLA asset, which means that it actually has more power in a bank portfolio, because the idea is it can be liquefied as a treasury bond, as a government bond, as cash immediately. So it has kind of a higher level tier one status, and that's what's coming around the corner. And what happens is, if that's something, it's already tier one for central banks. So if that happens throughout the banking system, what that means is more large banks are going to want to have more of their portfolios in gold rather than in debt, whether that's replacing debt with gold or whether that's simply augmenting their gold position and augmenting their debt position less in the future. However that looks, what it will reflect is banks buying more gold, because gold is now considered not just a reserve asset, but a high quality liquid asset. And that actually is a major distinction that's coming around the corner with respect to all of these Basel conversations. And it's a really good question, because I think people don't necessarily, or haven't really necessarily thought about that distinction. But to me, it's a big difference. It's the kind of distinction that makes financial players throughout all sort of levels of the financial system, domestically, in the US and globally in general, want to buy more gold.
So I guess what you're saying is that the yeah, it's always been a tier one asset for central banks, but now it's moving towards like commercial or private banks. And there's been speculation that all the physical gold that's been flowing to the U.S. could be U.S. banks buying that before they start using gold as a high quality liquid asset, and that that they're going to start doing it in the beginning of July. But I haven't seen anything official from the Bank for International Settlements from that. Do you know anything more in detail about it?
Run by Basel, right? So already, just going back to that, according to the BIS, if you have gold in your portfolio already, it has something called a 0% risk weighting. So already, if banks had been holding gold, it doesn't count negatively towards their risk profiles, which is a positive. Like if they were already holding it or whatever gold they hold, and that has been true consistently for all of the Basels. One, two. And the discussions on three and the parts of three that have been adopted. So that just means that if a bank has gold, like physical gold in its vault, that has no risk, and it counts positively on their risk weighting as a result in terms of them having lower risk. What is it also says is not only that you can, have this role, which has been there, which is a BIS noted role, but that you also can again have it as a considered a liquid asset, which gives it an additional kind of shine, if you will. So without a major announcement on that, it would be possible that we start to see banks using their amounts of gold or stockpiling more gold in their balance sheets or in their SEC statements or just even in their sort of shareholder communications if it gets to be a large portion of their reserve portfolios or of their liquid assets. I don't know, and it's actually something I should look into if there is an item for that in terms of what's considered liquid assets in the SEC formats, but it should be if it isn't because of this new ruling.
Before we wrap up, just one more question, and it's maybe a difficult one. Where do you think gold will be in 12 months' time in terms of the dollar?
Yeah, so in terms of dollar gold, I do see it over 4,000 in a year's time. And I'd mentioned that in that 10-year piece on Prinsight's debtsubstack.com. And also in a lot of the pieces, we've been pretty much forecasting a 4,000 level into 2026 and a 5,000 level into 2027. Not because those are nice round numbers, which they are, but just looking at, again, all of this momentum, the purchasing that's going to have to happen, the demand that's going to come into the gold space. And again, once banks are holding more gold or central banks are holding more gold, it really does create a cushion for even where market volatility, which always comes up in any asset, might push gold down. And that's kind of what we've been seeing. That was the point of that 10-year piece, is that, you don't see gold really reacting that much to volatility. I mean, you see some percentage movements down here and there, but for the most part, it stayed pretty constant. And so that's why I think we're going to continue to see it creeping up to these levels. Demand's not going to stop. All of these extra rules and conversations we've been having from state level to, continued purchasing by sovereigns, et cetera, to being a tier one liquid asset for banks as of July 1st. This is all going to move towards 4,000 level for gold over into 2026, I should say, somewhere in the end 25 beginning 26 arena and up to 5,000 the following year.
Great. Nomi, thank you very much for accepting my invitation, and I'll keep an eye on your work, and we'll keep in touch.
Thank you so much. It's always a pleasure to speak with you.
You're welcome. Take care.
You too.
Thanks.